Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope everybody had a beautiful day. And in today's markets, guys, a little bit of relief rally after yesterday's complete bloodbath. Yes, yesterday was a day of heightened emotions around the negative CPI report that came out. And today, the markets were able to find some relief in a couple pieces of news. Number one, we had producer inflation data come out on the morning, which showed that things may not be as gloomy as some people were forecasting after yesterday's CPI report. And then, to kick things off into the middle point of the day, we had Apple release some very bullish news, which caused its stock to have its best day in pretty much the last year. Apple up about 4.3% on the day. And we were saying after yesterday's sell-off here, guys, that the bears had one job to do if they wanted to get some follow-through, and that was to crack through our weekly levels of support on both SPY and QQQ. As of today, they did not get that follow-through that we were potentially anticipating here after the fearful sell-off of yesterday. And as a result, as we were saying as well, if they did not crush these levels, the bulls would remain in short-term control. They will not go down without a fight, and they have been putting up a heck of a fight at our large areas of support. So in today's video, guys, we're going to take a look at two things. We're going to take a look at our PPI news and see exactly what producers had to say about the inflation side of things in respect to supply chains. And then, of course, we're going to cover the Apple news, but that's going to be towards the tail end of the video when we cover our stock-specific technical analysis. So I'll do that when we cover the ticker of Apple, of course. And then we're going to cover our major technical analysis in forms of our major indexes, our major big tech names, and lastly, take a glimpse into some swing trades that I feel are pretty juicy right now. So without further ado, guys, let's get right into today's video. SPY up 0.75%, QQQ up 1.6%, and today was all about rotation. Financials and healthcare were down, but QQQ largely making up for those losses. Financials and healthcare did a lot of the heavy lifting over the past month as QQQ stayed flat. Now, it's very nice to see that when XLV, financials and healthcare rather, we're having a little bit of a pullback over the past 2 weeks. QQQ has held its ground and now is starting to rally. So the healthy market rotation simply continues. And you can see that best on the heat map today here, guys, right? Big tech with some huge outperformance on the day, led mostly by Apple and your semiconductors as well. But for the most part, most of big tech having a very good day. Healthcare pulling back. Financials, our other major weighted sector, also pulling back. And the bottom half of the market, fairly muted, if I do say so myself. You did have some slight outperformance here in a few names, but for the most part, the bottom half of the market lagging behind today. Today was really a story about big tech, and you can see that best on the one-day relative performance. Technology, communication services, obviously led by Google and Meta, and consumer cyclicals actually getting a bid this time, all to the upside. To the negative, we did have financials, utilities, energy, consumer defensives, and healthcare. So the market really mixed. And on the one-day relative performance, guys, on the 1 week rather, everything still shows the same picture. Very, very mixed market. But now technology is finally starting to pull its own weight, and being the largest sector in the market, they are obviously going to be responsible for most of your moves. Even if the rest of the market didn't perform too well, only a handful of names were enough to really send us to the upside heavily today. So what exactly was the news report, guys, that we got first thing in the morning that gave us some relief on the morning? Let me pull it up on the futures. You can see it best. That was the PPI news release, and it really gave the market some lift into the early session. And then right about here, the Apple news came out and really took us into overdrive. So let's take a look at the PPI. What did the producers have to say about inflation? So let's take a look at the numbers here, guys. So the consensus for month-over-month inflation for PPI was 0.3. It actually came in better than expected. Finally, an inflation report coming in better than expected. That is a very good contrast in relation to the last 2 months where every single one has unfortunately been negative, right? So this one finally coming in positive. And on the year over year as well, we were expecting 2.2. That came in at 2.1. So a beat on both month over month and year over year. And we also had another piece of news that added to the fuel for the bulls. And that was your initial jobless claims, supposedly coming in at about 215,000. They came in a bit lower, so less people filing for unemployment. Just goes to reiterate that the jobs market is still very, very healthy, and that is something that the Fed keeps a close eye on. Now, a few of the highlights from the PPI report. Well, let's take a look. A measure of wholesale prices increased less than expected in March, providing some potential relief from worries that inflation will hold higher for longer than many economists had expected. And we've been saying this, guys, as of yesterday's video. I remember showing you the chart that Yahoo compiles of about 28 items. And 21 out of those 28 items are indeed in a deflationary process. So inflation is really not widespread. There's only a few sticky elements, and most of those have to do with services, and the producer report largely showed the same thing. On the producer price side, March's gain was pushed by services, which saw a 0.3% increase on the month. Conversely, goods prices decreased 0.1%, flipping a 1.2% increase in February. So for the month of March, everything doing fairly well in terms of producer inflation, largely due to the drop in goods. Services, though, remaining slightly elevated, and we're going to take a look at that on the charts as well. Now, Wednesday's CPI release jolted markets yesterday, which had been anticipating an aggressive series of interest rate cuts this year. The report showed annual inflation running at 3.5%, which we saw yesterday, well above the Fed's 2% target, that we know. The market is now pricing in the possibility of just 2 rate cuts this year, likely not starting until September. So, let's take a look at exactly what happened on the PPI today. So you can see in terms of producer inflation, guys, this really has not been a problem over the course of the past year. We're well back within our pre-pandemic norms of month-over-month and year-over-year inflation in terms of your total PPI number. Now let's break it down, guys. So let's just break it down, goods versus services, right? So you can see that goods here largely back to our pre-pandemic levels of inflation. That is good. It's showing us the same thing on the producer side that it is on the CPI consumer side. Goods are not the cause of current sticky inflation. The cause is this line right here, services. So take a look at services. Services 0.3% month over month, and you can see that February read came in extremely hot at 0.6. We're now starting to get back to pre-pandemic levels on the producer price index for services. However, we're still towards the upper bound, right, of those pre-pandemic levels at about 0.3% month over month. Where you're really going to start seeing a downtick inflation, guys, if we can put in a few months in a row where we're near 0 or maybe 0.1, really get us to the lower bound of this range prior to the pandemic. So services still a little bit elevated on the producer side as well. But for the most part, guys, in terms of PPI as a whole, really, that has not been the problem. The problems have all arisen from the CPI reports. PPI and PCE, the Fed's preferred index, those have all been coming down steadily over the past 6 to 9 months, really not putting in much of a uptick in the form of a trend up for inflation on the whole, in terms of the whole chart right here. So that is pretty much what we were dealing with PPI this morning. Gave a really nice relief rally to the markets as a whole. And now your bulls are back in control of your hourly trend change. So the daily bounce is underway. And with that being said, guys, let's jump right into our technical analysis portion of the video and see what are the bulls dealing with right now. So as of currently, we were sitting at yesterday, we were in this extended daily downtrend, right? And we were keeping an eye. If the bulls were to put up a bounce, they had to do it in this big area of horizontal support. Why is that important, guys? Because it is our weekly higher low for this current weekly uptrend, right? So we could not lose that level, or else we run the risk of setting up into a weekly downtrend on the SPY and joining Team Bear that have already started that form of weekly sell-off and weekly downtrend in healthcare. Healthcare, the only sector pretty much to be setting the weekly downtrends thus far. So SPY and QQQ maintaining those weekly lows was a crucial point that we were looking at today, and they defended it very, very beautifully. So now at this point, guys, in the form of SPY, what we're going to look at is a break to the upside of pretty much the Tuesday high. If we can get back above Tuesday's high, we will reset the uptrend here, and we will be recapturing a few things. Not only will we be recapturing the daily uptrend, we'll be recapturing your moving averages, which we're currently battling with right now, and we'll also be recapturing this trend line as well and getting us back within our established trend line that's been, favoring us over the past 4 or 5 months. So the bulls, with some great work, daily bounce is definitely underway. We'll need to see this hourly trend persist into tomorrow. Now we have officially filled the gap from CPI. We came right up to that level. Now we're going to be anticipating the higher low for further trend continuation. And let's try and make a move, guys, above the high of Tuesday to recapture this daily uptrend. So as of now, the bulls not with any major red flags. They're doing a great job at defending these levels. I'll reiterate exactly what I said yesterday here, guys, as well. It's going to be very tough for the bulls to roll over completely without losing these weekly levels, and that is pretty much 512 down to the low of about 505 on the SPY. So keep a close eye for that. Very nice rally from the bulls today. Moving on to QQQ. QQQ largely showing roughly the same price action as well. So take an eye here, right? We were in a daily downtrend as of lately, and now the bulls have tried to put in a bounce attempt and try to recapture that daily uptrend. Good thing for them, the QQ is already ahead of the SPY, right? You can see that we're not yet above Tuesday's high on the SPY. Take a look at your QQQ. QQQ actually running ahead of SPY currently and is now in a new daily uptrend. So they finally recaptured the daily uptrend. We're now back above our moving averages. We never lost these weekly lows, which were absolutely crucial to maintain the short-term control for the bulls. So now it will be a question, guys. How much distance can we put between us and these lows, as we're still fairly close to them? Daily uptrend is confirmed right now. I would like to see the bulls really get ahead of our previous all-time highs and get back within this trending area right here. That will give us a better indication that the month of April should not be a massive sell-off, right? If we can recapture this short-term uptrend leading into your big tech earnings, which start in about a week and a half, 2 weeks at this point, it'll set the bulls up very nicely to have a lot of space, a lot of cushion between them and these lows right here, which are crucial to maintain for our overall weekly uptrend. You can see that best on the weekly chart if I pull it up, right? Weekly uptrend, need to protect these weekly lows right here. So far, it's just been a tightening range. So if we can really break above here within the next week of trading, it will give us a lot of space to work with in the event that a few of our big tech earnings may end up negative. It'll create a lot of space for a weekly higher low for further trend continuation. So all in all, not looking too bad on your QQQs either. Now let's take a look at financials. Financials not looking as pretty, but at least they did a great job here, guys, of holding up the markets. Take a look at QQQ. QQQ has been roughly flat since the early part of February in terms of your levels, right? But financials since the early part of February, they have pushed up significantly and have really done a great job at maintaining the levels on your S&P 500 because they represent such a big weight in the index. Now, moving on to the technical side of things, right? Daily downtrend still continues. So as soon as we get our daily bounce, and that will be noted by a change of the hourly trend. Let's say that happens tomorrow and we break today's high, hourly uptrend will be set. Perfect. Financials, keep an eye on that as well. Tomorrow, big earnings. So they do have a catalyst to potentially start reversing that. JP Morgan, Wells Fargo, BlackRock, Citi, Progressive, State Street, just a few of our first financials names to report earnings. So they will have a catalyst. If the catalyst is bullish, well, then the bulls may benefit from a hefty little bounce here. And we'll be looking how much of this move right here can we recapture. Recapture up to 61% of the move. And we stand a very good shot, guys, at potentially creating enough space to reverse this back into a daily uptrend. We would need a bounce at least to about 41.31. Get me to about 41.31. We have enough space to maybe set the daily higher low and go for the daily trend change. And if we do get that daily trend change, your weekly consolidation is finished. As of now, though, the bears still maintain full control. And if tomorrow earnings are not as bullish as anticipated, we could just end up furthering this daily downtrend to the downside, which will just extend our weekly consolidation a bit further. Coming up on a key level, 40.2 is going to be your 12 EMA, but the bulls, guys, still with so much space to set the weekly lower high, higher low, and then make another attempt at your all-time highs. We are losing, it all depends on how this weekly candle closes. It really all depends on financials, earnings, guys, but we're in jeopardy of losing our previous big area of resistance. It should have been acting as support. We're kind of getting through that now. The bulls never really jumped too much above this level to give us enough space that we can rely on it as support, right? They kind of just broke above it in a weak fashion, and now we're pulling back right away, but still just anticipating the higher low, for further trend continuation. So everything is not looking too bad on financials, guys. If anything, it's going to provide us with a very juicy buy the dip opportunity. Myself personally, I'll be looking for American Express on that dip opportunity. If American Express continues pulling back under 210, that is where I want to go shopping for a few more AXP shares myself. So I'll be watching the how financials earnings play out tomorrow. Now, moving on to our next index, which will be healthcare. So healthcare not looking the greatest, I will admit, guys, 0.41% to the downside. But once again, just a byproduct of our healthy rotation. Healthcare did a great job of maintaining the high levels and now just taking a little bit of a breather. So daily downtrend is maintained at this point, approaching a very crucial area of support, which is your previous all-time high resistance. Now, the bulls have created a ton of space above that they will be able to use this level as support. So I'm anticipating the bulls to put up a heck of a fight in this area right now. If we start bouncing on healthcare, guys, keep a close eye on the high of Tuesday's trading. Need to get as high as possible in relation to that to give ourselves the best chance at resetting the daily uptrend. If the bounce is too weak, we will just continue this daily downtrend and just continue this weekly downtrend as well. So looking forward to the to the healthcare bounce, guys, and depending on the size of the bounce, it'll really give us a better indication whether or not this weekly consolidation is finished. And then we can move on to step number 2. How much of this weekly leg down can the bulls recapture to potentially regain the weekly uptrend? So healthcare is still on the watch. One of my favorite swing trades currently right now is going to be ABBV, right? Have a very nice breakout retest on the monthly chart right now, retesting our prior all-time highs. Juiciest swing trade in all of healthcare right now, in my humble opinion. Now, moving on to semiconductors. Semiconductors doing really, really well today. Still kind of trapped, however, within the context of this tightening range right now. On the weekly, guys, just to explain very quickly, right, it is a weekly bull flag right now. Top end of the move, sideways consolidation, bulls in full control, not losing the lower end of these levels that we were watching yesterday. So now it's up to the bulls. We've regained a short-term daily uptrend in the context of this tightening range. Now we need to break these highs right here. A break of 230.5 will be very, very bullish and could lead into another weekly leg higher for your semiconductor bulls. Everything looking very good after the last 4 or 5 weeks of consolidation. You know, a lot of names, Nvidia, AMD, Intel, so many names have consolidated sideways or down over the last better part of 3-4 weeks. So there are some fairly juicy dip buying opportunities in that market right now and could be very ripe for another weekly leg higher. Looking very good in terms of a technical breakout right now. Obviously, that all comes undone if we get a break of 215 to the downside. That would mean we would be losing this tightening range and in favor of a weekly downtrend, which would just be monthly consolidation. As of now, I'm still favoring the bulls as the overall setup is in a bullish context. The higher timeframes are in full control by your bulls. So until that changes, all of these breaks, I will have a bullish lean. Now moving on to the Russell. Russell performing very decently today, 0.68% to the upside, and the Russell rejecting now from our area of support that we were looking for the bulls to protect currently. This was our past year and a half, almost 2 years worth of resistance, should now be acting as support, and the bulls are putting up a fight as we come down into this area. However, on the short-term timeframes, guys, we are still in the context of a daily downtrend. Could be expecting a lower high into lower low because we have a lot of overhead resistance. We have these guys right here, prior support, going to be current resistance. That's who we're rejecting from right now. And just above us are our famous moving averages. So a lot of resistance for the bulls to deal with right now. How do you know if the size of the bounce is adequate? I will tell you right now, it's all in the fib levels right here. If we can get a bounce up to about 204, as high as about 205, that would give the bulls the best chance at reversing this into a new daily uptrend and start re-attacking this higher level of prior support, which is now going to be overhead resistance, which is pretty much your 211, 212. On the weekly, not looking too bad. Still have not lost the weekly uptrend. We were in jeopardy of losing it if we got a weekly close below here. So we'll keep a close eye on the developments of this index here tomorrow. We will keep a close eye on whether or not they do close below 199.87. If they do that, guys, it would be a confirmed weekly downtrend, and we may just be heading further into our area of consolidation. Personally, myself, I'll only be interested in trading the Russell if I can get a buy point roughly around 196, 195. I'm targeting for the monthly higher low for further trend continuation. So that is the type of trade I'm looking for on IWM. If this short-term weakness just persists into the next week of trading, that would be a large byproduct of yields continuing to rise. So keep a close eye on yields. If yields continue to rise, we may just get our buy-in opportunity for the Russell here over the next couple of weeks. Now moving on to the Dow Jones. Lastly, Dow Jones still trapped in the context of this daily downtrend right here. So as of now, still watching out for the lower high into lower low, right? That is just going to be continuation for weekly move consolidation down. Now, in terms of the daily, guys, what do we need for the bulls to get a good enough bounce? Keep an eye on your levels, right? As soon as this bounce is underway, how do you know the bounce is underway? You need to reset the hourly trend, right? We still do not have it. So tomorrow, if that happens, we reset the hourly trend, we will be looking at a daily swing move higher, and then we need to break or get as close as possible up to the high of Tuesday's trading. However, there is a few resistance levels above us. Our moving averages are acting as resistance, and this prior horizontal line, which was resistance, acted as support. That's going to be the area of confluence. So between 39,200 and 39,000 roughly, that's going to be a nice little pocket of resistance whereby the bears can potentially reject us. Then it'll be up to the bulls to set the higher low into higher high if you want to see that trend reversal and put an end to the damage that's been done on the weekly. Keep an eye on this weekly close here, guys, because if for some much reason we still close below 38,500, it would technically be a weekly downtrend. As of now, there's no close below. They're maintaining the level. It just goes to see, we just have to see, guys, tomorrow's trading, what will it bring? As of now, the Dow Jones not looking too bad, looking slightly bearish in terms of the weekly, yes, but we can still just consolidate sideways on the weekly timeframes, and we're still on the longer term timeframes, guys. Your monthly bulls are in full control, still just looking for that monthly higher low for further trend continuation on the Dow Jones. So even though the bears are in short-term control of the daily and pushing down on the weekly, what are we looking for? Just looking for the monthly higher low for further trend continuation. So the bulls, although they've lost control on the daily and the weekly, your longer term bulls have never lost control. So overall context of the Dow Jones is still quite bullish in my opinion, despite this most recent sell-off. Now, let's move directly into our large tech names, shall we? All right, guys, so kicking it off with Apple. Apple having an outstanding day, one of its best days in pretty much the last 12 months of trading, up 4.33% on the day, and that came off the back of a few pieces of news. The first piece of news was reported by Bloomberg early this morning, where they said Apple plans to overhaul the entire Mac line with AI-focused M4 chips. Very good news released by them. Take a look at the article. The company, which released its first Macs with M3 chips 5 months ago, is already nearing production of the next generation, the M4 processor. The move will mark a quick refresh schedule for the iMac and MacBook Pro, as both lines were just updated in October. The Mac Mini was last upgraded in January 2023. Apple is then planning to follow up with more M4 Macs throughout 2025. So really overhauling their entire line of laptops and Mac computers as a whole. Looking very good. Here is the key factor, guys. The big focus for Apple this year is to add new artificial intelligence features across its products. The company is planning to preview a slew of new features at its June developer conference. A large swath of those features are designed to run on the devices themselves rather than in remote servers, and speedier chips will help drive those enhancements. Apple is also planning to make AI-focused upgrades to the year's iPhone processor. So that is some very bullish news here, guys, from Apple wanting to include more AI software, or more AI rather, in their suite of software as a whole, and looking very good. Apple really needed some bullish news like this after having been trapped in the lower levels. And the second piece of news that came out shortly after that was a potential bullish catalyst for the iPhone, Apple's AI upgrade cycle to be driven by iPhone 17. Now, keep in mind, guys, there was a big piece of criticism towards Apple that last year and the year prior, not a lot of people were upgrading their phones because of the lackluster differences between the iPhones 14 and 15, and potentially even the 16 coming out this year. But that is potentially changing with the iPhone 17 releasing in 2025. It will be a phone all about AI and AI features alike. So, the AI on the horizon for Apple. The excitement surrounding the imminent AI-led iPhone upgrade cycle builds on the momentum of the 5G era. This is the last time that Apple had a tremendous increase in sales, is when they adapted their phones from 3G capacity to 5G capacity. It seems like a long time ago, guys, about 7, 8, 9 years at this point, but that was the last large upgrade cycle for Apple, and this could be the next one coming in 2025, where all of their phones will be equipped with very heavy AI features It is looking very good, guys. So expect the broader adoption of AI phones for the smartphone industry next year in 2025, and that'll be started with the iPhone 17. So Apple benefiting from really good news across most of pretty much their suite of products, right? Upgrading their Macs, upgrading the iPads. That was released about 2.5 weeks ago at this point, the iPad news, and now some more bullish news on their phones. So the company really working in the right direction. In terms of the technical analysis here, guys, well, the bears could not keep us down forever, right? So looking very, very good after today's momentum. We were looking, guys, this daily downtrend was in motion for a better part of the last 3 weeks of trading. And now we have engulfed it all in one move. So the daily downtrend was getting weaker and weaker and weaker as we approached our last line of defense down here at 166. And today, the bulls ran with any positive news that they gave them. Extremely bullish day, guys. So at this point, any move lower, just going to be looking for a higher low for the daily trend change. This is the type of bounce that you look for to start reversing a nasty daily downtrend. They've created a ton of space off the lows. So any move now at this point, any little drop here, anything above 167.23, going to be looking for the higher low for daily trend shift. We have not had a daily trend to the upside on Apple since pretty much the midpoint of the month of March. So interesting for them to be able to recapture a lot of this downside in only one day of trading. Very, very bullish news for the company as a whole. If this move simply continues to the upside, our overhead first level of resistance will be between the 178 and the 180 mark. 180, guys, is going to be a big one to the upside. So it would be very nice to see Apple pull up into this area with a strong daily uptrend behind them. In terms of the weekly, this weekly move has done absolute wonders for Apple's chart. We will need to see them, if you want to reverse this weekly downtrend that we've been trapped in so far, we need to see them get as close as possible to this level right here, 178.65, which we just referenced as resistance, right? We're getting very close in one day of trading, guys. The bulls have recaptured pretty much almost 78% of the move. So the bounce is very, very juicy at this point. If Apple can come up to 100% retracement and bring us up into the 178, 180 level, that will give us a 100% engulfing move on the weekly and sets them up beautifully for a potential earnings release that's going to happen later on in the month of April. If they can set up something like this, higher low, and then come out with positive catalysts on their earnings, you could be seeing a reversal to the uptrend for the bulls in Apple, and that would be a very welcome change. So Apple looking very, very, very good indeed, especially if you are looking to position for a swing trade. I'd be looking for the higher low for the entry point right around here, right? Higher low for potential weekly, for potential daily trend increase. And how do you know that the higher low is set? Just look for the hourly downtrend to be starting. And as soon as you see the hourly trend shift, this is a great point to be entering for any swing trades on Apple. So watch out for that pattern as a whole. Now moving on to AMD. AMD not looking bad either. AMD up about 2% on the day. AMD though still trapped in the context of this really tight little level down here after the last drop on last Thursday, right? So been within a week of trading within the same price range. What the bulls need to see, we need to see a break of the high of Tuesday's trading, a break of 172.17. That would give us the daily uptrend back, and then we would have to deal with our overhead resistance level sitting at about 180, 182. That's the top end of this range right here, and it will be acting as resistance once again. So it would be nice to see the bulls put in an engulfing move, get us a nice little daily uptrend to 180, and then we will be battling with our overhead resistance even on the weekly here, guys. Need the bulls to start putting in an engulfing move on AMD, as AMD has been kind of lagging behind in terms of semiconductor performance as of recently, right? So all is not lost for the bulls. We are still maintaining a very good area above our most recent support, which is the 164 down to 168. So crucial for the bulls to maintain that. It's the previous all-time high. It is the previous 4 or 5 weeks worth of support down here in January and February. So looking to protect that as well. And I've been saying this, guys, for about a week's time, right? If we do pull down into this green box, we should be getting that first time bounce. And it seems as though, even though we haven't pulled down into there, we are starting to get that bounce off of these bottoms. So this level right here for AMD, still a tremendous opportunity to be writing puts, in my opinion, as close as possible to 160 and lower should be a very good trade opportunity. So need to see a little bit more from AMD bulls, but this definitely is a good start. Now moving on to Amazon. Amazon with some tremendous outperformance today, 1.67% to the upside. And Amazon did something today, guys. new all-time highs. Yes, Amazon has finally cracked above the all-time highs in a very glorious fashion, guys. Daily uptrend is so gorgeous at this point. So any move lower at this point on Amazon, just going to be looking for a higher low, anything above 182.64, higher low for further trend continuation. I would like to see the bulls be able to put in some decent space above our all-time highs. That way, once we do get a little bit of retracement, we can use the all-time highs as an area of support to continue our rally forward. As of now, we have not created enough space beyond the all-time highs to give us that possibility. As of now, if for some which reason, guys, over the next couple of days or a week, we just lose this daily uptrend into a daily downtrend for consolidation, well, the bulls are going to have to count on the previous 178 level to be acting as support. That is the big prior top end of your resistance range area that Amazon's price struggled with a ton back in 2020 and 2021. So if ever we do get some extended consolidation for this beautiful weekly uptrend right here, going to be looking for a higher low, anything on the weekly above 171, guys. Just looking for a weekly higher low for further trend continuation. And now the 178, this whole previous area of resistance, right? It should be nice support for the bulls right now to maintain this leg higher. But what I really would like to see, guys, is over the next week, Amazon push high into about the mid 195s, maybe even $200. If it can manage that, that'll create some decent space above the all-time highs. Give us some cushion leading into our earnings, which do come out Thursday, the 24th of April. But guys, I do believe, if you ask me myself, I do believe that Amazon's earnings should be extremely bullish. So I'm happy to be positioned long leading into them. Now moving on to Google. Google, another day of outperformance by them. 2% to the upside. Google is looking so healthy, guys. Look at this massive daily uptrend right now. So looking excessively bullish on Google currently, right? Any move lower currently, as soon as this move has topped out, any move lower is just going to be for a higher low, anything above 156.30, looking for the higher low for trend continuation. This prior area of resistance and our current daily higher low is going to be the area, our first line of defense. Once again, that's 156.30, and you should have your 12 EMA curling up into this area of confluence as well. So at this point, guys, dips for Google are still for buying. New all-time highs are set. The weekly is looking absolutely ridiculously gorgeous right now. Beautiful engulfing move. So even, guys, even if Google were to lose this move and set the daily downtrend into some weekly consolidation, anything above 132, just going to be looking for a weekly higher low for further trend continuation. And now we're so far above our previous big area of resistance, right? This whole 154, that I do believe that that is where the bulls are most likely going to put a stop to the bleeding if we come down into there, leading into the earnings, which are going to be the 22nd of April. So Google, no red flags at all. Love the company, love the valuation, even if we're at all-time highs. So any extended dips on the weeklies, in my opinion, lower 150s are definitely a buy for Google. Now moving on to Meta. Meta not looking bad either, 0.64% to the upside. Meta was actually never looking bad as a whole. We were always in the context of this beautiful daily uptrend right now. Let me just move the chart down. Apologies for that, guys. So daily uptrend is still well underway. We got our higher low yesterday, and now we're just looking to push to new all-time highs. That would be a break of 531. Get the break of 531. We're heading up to 550 psychological resistance. No red flags at all for Meta right now. The daily looks beautiful. We're above our moving averages. We've now created a ton of space between us and these weekly levels right down here at about 490, 480. That would be your weekly higher lows. It's the areas that the bulls absolutely need to protect, and they did a great job protecting that for about the 3-4 weeks. They were kind of stuck in that area, right? So everything looking fairly good for your Meta bulls right now. No red flags. They have earnings pretty much the 24th of April. So what we need to see, guys, is the bulls still maintain enough space above these levels that even if we have a bearish earnings reaction, we have enough space between us and these lows to really hold those levels. And one thing's for sure, if we do get a bearish reaction to earnings, sending us back down into the 480, 475 level, I will be buying that dip. I've been looking for a juicy dip on Meta, but it just has not manifested, guys. I've been waiting for the monthly higher low, just a little bit of a dip. I wanted Meta at 450, 440, could not get it. So now we have to adjust the price targets to the upside with the bounds of who's in control. So everything looking very good on Meta. As I said, my new price target for a little bit of a swing trade on Meta, as close as possible to 480 as possible. Now moving on to Microsoft. Give me a very quick second. You guys know the drill. All right. So Microsoft actually looking extremely good, guys. 1.10%. Looking very good. Daily uptrend now back in motion. We barely clipped the daily uptrend today, so looking very good. And Microsoft has never been unhealthy, even with this 3 weeks of sideways consolidation. The consolidation is above our previous range of congestion, right? Nice move up, congestion, nice move up, congestion, nice move up, and now it is a weekly bull flag, guys. We've moved above. We're now flagging right above the tops here. So this area, the breakout retest trade that I talk a lot about on the channel, this is a perfect area to be buying the dip on Microsoft for that next weekly leg higher. Microsoft looking extremely bullish if they maintain current momentum and smash above the all-time highs. The next area of resistance, guys, is going to be our 450 psychological level, which is significantly above us right now. Keep in mind, they do have earnings the 23rd of April. What I would like to see Microsoft do, guys, is maintain above the higher end of this range. So keep me above 415 leading into earnings. I believe Microsoft will be able to beat their earnings. Microsoft usually never really disappoints on earnings as a whole. So if we can maintain above these levels and get roughly close, 420, 415, if we can see a little bit of a dip here before earnings, could be a very juicy opportunity to be writing. I usually don't like writing short puts into earnings, but at this point, if we're down here 415, I may consider to be writing some short puts under 400 for earnings, because I'd be very surprised if the bulls are able to give up this entire move after an earnings report from Microsoft. That would be a significant drop. We'd be talking about 5%, and Microsoft usually has not gone down 5% after earnings in years. So it could be a decent swing trade opportunity. Now moving on to Netflix. Netflix not looking too bad, 1.65% to the upside. So Netflix in the context still of trying to recapture this daily uptrend to the upside, right? So not looking too bad on Netflix at all. Barely there, right? Almost there. 638 would be a break of those highs to recapture this daily uptrend. The weekly, we were never in jeopardy of losing the weekly at all, right? So looking extremely bullish on this weekly time frame for Netflix right now. Any consolidation, guys. So if for ever which reason we don't get the daily uptrend and flush this to the lows and send us into a furtherance of the daily downtrend, well, we're just going to be looking for a weekly higher low, anything above 550, just looking for that weekly higher low for further trend continuation. So everything looking good on Netflix. Price action before earnings. Earnings, guys, already next Thursday for Netflix. So the price action for Netflix leading into earnings for the next 5 days of trading should, in my opinion, be fairly muted. One thing's for sure, if Netflix misses on earnings or for some rich reason goes down on earnings, let's say their guidance isn't all it's supposed to be, well, I'll be looking for trades on Netflix within as close as I can get to the 550 range, which is the prior weekly higher low. 575 to 550 is my ideal pocket for Netflix. Moving on to Nvidia now. Nvidia looking very good on the day, 4.11% to the upside. And Nvidia did a great job of doing one thing today, engulfing the most recent leg of selling. So let me draw that more clearer, right? Daily downtrend, your most recent leg of selling was right here. And now we have engulfed it 100% of the move. We're now back above our moving averages, and now we're back healthily above our line in the sand level 850 that we could not lose if you wanted the daily bulls to maintain this tightening range at the top, right? So looking very good now. Any move lower just going to be for a higher low for further trend continuation on Nvidia. On the weekly, looking very good. If we can close the week like this and recapture the daily uptrend in this fashion, your weekly higher low will now be set at roughly $838. And at that point, guys, we'll just be looking at this point for the weekly engulfing move to the upside, continuation of the weekly uptrend higher, and then your psychological level of resistance will be the $1,000 mark. So everything looking very bullish on Nvidia. The bulls have now recaptured the short-term timeframes. So until they lose that move, your daily swing higher continues. And then when it tops out, just gonna be looking for the daily higher low for further trend continuation. And to Nvidia, looking extremely good. Did not come down to my price target. I wanted it between 800 and 750. So just looks like I'll be caught on the sidelines a little bit more for Nvidia. But congratulations to all the bulls that have been holding so far. Now moving on to Tesla. Tesla 1.65% to the upside. Now Tesla as well will probably the price action on Tesla, despite our recent bullishness, probably going to be muted, guys, likely until after earnings, right? So as of now, we have recaptured the daily uptrend, trying to set the daily higher low and continue this daily uptrend north, right? So as of today, the bulls are trying to recapture this hourly trend change they lost yesterday, right? Looking for the daily leg higher. As of now, the bulls have one job to do over the next week of trading, guys, and that is putting as much space as possible between us and these lows right down here. Those are going to be roughly the $160 range. If we can create enough space, potentially bring us up into the high 180s, it'll give us a really, really good cushion on Tesla, guys. If ever Tesla earnings are bad and we're sitting roughly close as possible to 190, then it would need a significant 15% drop after earnings to flush these lows. So that's what I'm looking for the bulls to do, is maintain this daily uptrend here. If the rest of the market continues on the bullish run here, need to see Tesla participate and start bringing us in to the higher 190 levels. Really put enough space between us and these weekly lows, right? If, for however which reason, we stay muted and stay below here in the low 170s, high 160s, I'm going to get fairly nervous for earnings, even though I'm not playing the stock, guys. Earnings probably are not going to be the best. We know that deliveries were down, so revenues will be down. It's curious to see what's going to happen to margins and EPS and their free cash flow. But with all the price cuts, I'm not expecting the best things. So if we maintain in these lower levels, mid 170s to about mid 160s, then you do set up for the absolute earnings flush. And that move could take us 10% to the downside and really start testing our last area of defense right down here at about 150, which is also the bottom end of your trend channel. So in my opinion, guys, the price action going to be fairly muted, so we were not going to get any major flushes of these lows, and we're probably also not going to get major breaks of the $200 range. But if we can get as high as possible, close as possible to 190, it sets us up at least to have some cushion before earnings. So we'll be keeping a close watch on Tesla every single day as we approach the earnings date. Once again, that's on the 23rd of April, 2 Tuesdays from now. Moving on to Palantir. Palantir 1.87% to the upside. Palantir really doing a great job of defending these lower levels here, guys. Talking about the $22 area, right? So Palantir has been stuck in this daily downtrend now for a while, and the bulls are looking to put in an engulfing move. Now, how high do we have to get? We have to get as close as possible to $24. Give me a bounce as high as possible, to close as close as possible to 24, and we do have a good chance of setting the daily higher low and reversing this back into a daily uptrend, which would put an end to our weekly area of consolidation, right? So Palantir, not looking too bad, playing this area aggressively, guys. One thing's for sure, if for some which reason we continue this move down, encounter a bit of resistance, right? Our moving averages are above us right now. This horizontal line of resistance as well, 2314, is sitting above us. So if for ever which reason we get rejected and head to daily lower lows, well, it'll just be continued weekly downtrend at that point on Palantir, and it would just be continued monthly consolidation, and it would just be a continued opportunity to buy these dips in this juicy, juicy green box, $21.50 down to about $19. This is the area that I want to be buying Palantir because we're trying to set the monthly higher low to then potentially attack the $28 level over the later part of this year. So Palantir looking very, very juicy. Despite its most recent 3, 4, 5 weeks of sell-off, I'm still a fan of playing Palantir, short puts especially, $21.50 down to $19. Now, lastly, PayPal. PayPal struggling today on the day, 0.12%. They were actually significantly lower, right? We got as low as about 64.73, so it's nice to see them recover a bit intraday. PayPal doing a great job. We had the daily uptrend going here, lost it with a flush of these lows, and now the bulls have done a great job at trying to recapture the daily uptrend, which they did. Now we're just looking to set the daily higher low for further trend continuation, and further trend continuation would be marked by a break of 67.15. That would be very good. Since we've recaptured the daily uptrend as of now, guys, we can argue that the weekly higher lows are indeed set as well. So PayPal has now been in a beautiful weekly uptrend for the past 2 months at this point, looking to set the weekly higher low, confluence of this area, right? 63 down to $61, the area that we cannot lose, has been acting as tentative support for the bulls. Our moving averages are down there as well. So looking to set the weekly higher low for further trend continuation. And this next leg on the weekly, if we do get it, guys, I do believe that we're going pretty much all the way up to about $74, $75 at the top end. PayPal looking very, very, very juicy. Even on the monthly, guys, look, monthly uptrend is in formation right now. We have not had a monthly uptrend on PayPal since pretty much 2021. So a few bullish things, few bullish reminders, guys, on PayPal. Number one, we are above our big downtrending channel line. So we're now above that. It is a technical breakout. We're also above this green line right here, which is your 200-day moving average. Something as well we have not had since 2021. And I showed you the capacity for a monthly uptrend too. So all counts show that we are in for a monthly trend change and a technical breakout of a long-standing pattern here, guys. Usually when we get technical breakouts like this, they do last a while as momentum starts building and building and building. So seeing PayPal recover the $70, $75, maybe even $80 level over the course of this year is probably a likely scenario at this point. I love this company as a whole. Valuation is still good. So if we do get a little bit more of a dip here, I'll be looking to play some short puts, 63 down to $61, and then trying to ride it up into the $70 range. So that's pretty much everything I had for you guys in terms of stocks for today. A few swing trades that I did want to bring up here, guys. Number one is going to be Vici. I've talked about this one on the channel for a number of months at this point. It is still within my sweet spot area. I love this company. It is my favorite REIT in the entire market. They're exposed entirely to the travel and entertainment sector. So that is not having a slowdown. However, it is a bit sensitive to interest rates, which is why it had a significant drop yesterday after the CPI report, about 5.6% to the downside. It's now so juicy, guys. Vici at $28. We only saw that last October, so I will be looking to make a little bit of a swing trade here, guys. It's just in a very, very wide area of consolidation. Vici has been pretty much for the past year and a half, 2 years at this point, ever since inflation and interest rates have been a little bit of a problem, and it pays a very juicy dividend, almost about 6%. So looking extremely good on that. The next swing trade that I wanted to highlight, guys, is going to be AbbVie. AbbVie, one of my favorite healthcare stocks in the entire market. You can see we had a significant drop, but we're coming into a big, big, big area, guys. It is a monthly breakout of your previous all-time high range, retesting the range right now. So this level right here, 166 down to the lower end, 162, this little pocket that we're entering right here, extremely juicy opportunity. You probably will see me open a few shares of AbbVie as I attempt to make this swing trade right here, going for the breakout retest on the monthly, looking extremely bullish for continuation the rest of the year. No red flags with the company at all, guys. It's such a solid stock. So that's the trade idea on AbbVie. Obviously, our risk to the downside, guys, is not that heavy. Risk to the downside comes all the way down to about $155. So you're risking pretty much, if we enter right here, you're risking about $10, but the levels to the upside, to the all-time highs, is about the, let's call it about 185. So you're risking $10 to the downside to make at least $20 to the upside. 2-to-1 reward to risk. Those are the types of trades that I love. The other one, I keep bringing this up on the channel, guys. It is MELI, same concept, right? Mercado Libre, love this company, love the valuation, love their growth perspectives as well. Monthly breakout, retest of this range. The range is about 1,500 all the way down to about, let's call it $1,300. So it is a wide range as a whole, guys. But my point in time, pretty much, my point that I'm looking for the bulls to respect is going to be the $1,400 level specifically. So in terms of risk reward, it's looking excessively juicy. Look, the bulls are playing great defense at this level. Looking to set the monthly high or low currently for further trend continuation. No red flags with the company at all, right? This kind of looks like Apple. The sells are getting weaker and weaker and weaker, and we're just waiting for that engulfing move to recapture this trend. So your risk to the downside is about $100 worth of risk to the downside on this stock right here, and your upside potential is the high of the previous leg down, which is going to be 1,800. So we're only risking about $100 of downside potential to potentially gain here about $300+ to the upside. So looking very good. 3-to-1 reward to risk. And the last one that I want to bring up, guys, is Monster Beverage. Monster Beverage largely for the same reason. Take a look at this monthly chart, right? Monthly trend is looking fairly good at this point, just looking for the monthly retest potentially of this range before further trend expansion. No red flags with the company as a whole, and the industry is in an expanding industry. Take a look how well this support area has acted in the past, right? This whole 55 down to about $53 range. Previous resistance right here, resistance again, blasted through it, recaptured it, and look, just being very good acting as support. In terms of your daily, you're getting daily oversold right now. Look at this heavy sell-off on Monster Beverage. Daily oversold. 4-hour timeframes are also crushed on the 4-hour, on the 1-hour, not crushed as well. But they were, so we're just looking to recapture this daily trend eventually, right? So Monster representing a great opportunity for a swing trade, in my opinion, as I do believe their long-term bulls will be here to support the price. Now, our downside risk at this point, the level of invalidation for this trade sits at roughly below $51. So if we were to enter this trade right here, we're risking roughly $3-4 to the downside. And what is our upside target, guys? It has to be above the all-time highs. we're going to be targeting roughly 62. So if we're entering 54 and risking all the way down to 51, that's $3 worth of risk. And we do have about $7 worth of upside here in the stock. So once again, a 2-to-1 reward to risk, and we're counting on our monthly bulls. All of those swing trades, guys, are predicated on who is in control of the longer time frames. We are just looking for retests of big support levels, not risking too much, and going for high probability setups with good reward to risk ratios. That is the key for the swing trades that I try to take on the channel. So hopefully all of that was insightful for you guys. If it was, consider dropping a like on the video. Would really appreciate it for the growth of the channel. And as usual, guys, if you're new here, consider subscribing to the channel as well. We'd love to have you here. We do these recaps every Monday to Friday. And then lastly, if you have any questions whatsoever in terms of stocks, options plays, technical analysis, whatever you want, guys, please leave the questions down below in the comments and I'll always answer you within the first 24 hours. So take care, have a great rest of your day tomorrow on Friday, and I'll see you after the close tomorrow and provide you a much needed portfolio update as well and see how my trades went this week. So take care, guys. See you tomorrow and peace.